The discussion surrounding the Iraqi Dinar (IQD) and its potential revaluation has persisted for more than 2 decades, captivating investors, speculators, and ordinary individuals alike who are drawn to the idea of a life-changing financial windfall, yet it remains one of the most misunderstood, hyped, and controversial economic subjects in modern currency speculation. To truly understand the rumors of Iraqi dinar revaluation and separate fact from fiction, one must take a step back into history, examine Iraq's economic conditions, explore the structure of its currency system, understand how foreign exchange markets work, analyze statements from authoritative institutions like the Central Bank of Iraq, CBI, the International Monetary Fund, IMF, and the World Bank, and confront the myths propagated by promoters who often exploit the hopes of people seeking wealth. Iraq's modern currency history begins after the fall of Saddam Hussein in 2003 when the Coalition Provisional Authority issued new Iraqi dinar notes to replace the old ones, partly to stabilize the economy and partly to wipe out the remnants of Saddam-era currency manipulation. At that time, Iraq was devastated. Infrastructure collapsed, oil production crippled, and political instability rampant. The dinar, which had already lost massive value due to sanctions and wars, stabilized at a very low rate against the US dollar, roughly 1,200 to 1,500 IQD per USD in the years that followed. This rate persisted for decades with only small managed adjustments because Iraq operates under a fixed/managed peg system rather than a free-floating currency. The Central Bank of Iraq holds foreign currency reserves, primarily in US dollars from oil exports, and uses those reserves to stabilize the dinar's value by controlling supply and demand in the foreign exchange auction process. This system keeps the dinar relatively stable but also prevents wild fluctuations or sudden appreciation unless authorized by monetary policy changes. Here enters the speculation. Dinar revaluation promoters argue that at some point the Iraqi government or CBI will flip a switch and instantly revalue the dinar from over 1,000 per dollar to near 1-to-1 with the US dollar, meaning someone holding, say, 1 million IQD, currently worth less than 800 US dollars, would suddenly own 1 million US dollars. The allure of such a scenario is obvious, overnight riches, but the reality is far more complex. Economically, revaluations of that magnitude simply do not happen because they would bankrupt the issuing country. Iraq would instantly be responsible for honoring a currency value many times greater than the underlying reserves or economy could sustain. A true revaluation in currency markets generally means small adjustments of a few percentage points to reflect changes in economic fundamentals, not massive 100,000% overnight gains. In fact, history shows that large currency revaluations are usually devaluations, where countries lower the value of their currency to stimulate exports or correct imbalances. Supporters of the revaluation myth often confuse terms like redenomination, which is when a country knocks zeros off its currency to simplify accounting and restore confidence. For example, Turkey cutting 6 zeros from its lira in 2005, with revaluation, which means a genuine increase in external value. Iraq has indeed discussed redenomination plans at times, where the CBI proposed removing 3 zeros from the dinar, turning 1,000 IQD into 1 IQD, to make transactions easier, but such a move would be value neutral. 1,000 old dinars would be exchanged for 1 new dinar, and prices would adjust accordingly, leaving no windfall for holders. This nuance is often deliberately ignored by those selling dinar as an investment opportunity in forums, promotional websites, and social media groups. The promise of a global currency reset, GCR, is woven together with dinar rumors, suggesting that world powers, the IMF, or even secret banking cabals are planning to suddenly revalue multiple global currencies, with the Iraqi dinar leading the way. These claims lack credible evidence, and both the IMF and CBI have repeatedly issued statements denying any such planned massive revaluation. The IMF, for instance, has consistently stated that Iraq's exchange rate stability is anchored by oil exports and foreign reserves, and any change would be gradual, policy-driven, and aimed at stability rather than sudden wealth transfers. The CBI itself has clarified multiple times that its objective is monetary stability, low inflation, and preserving reserves, not creating overnight millionaires. Yet, the fiction persists because it taps into a potent mix of hope, conspiracy thinking, and distrust of mainstream finance. From a factual economic standpoint, Iraq faces many challenges that make a massive dinar revaluation improbable. The country is heavily dependent on oil, which accounts for more than 90% of government revenue. Oil prices fluctuate, making Iraq's revenue base unstable. Political instability, corruption, regional conflicts, and weak diversification hinder long-term sustainable growth. While Iraq does hold significant oil reserves and could theoretically build wealth over decades, the process of strengthening the dinar would require structural reforms, non-oil sector development, fiscal discipline, anti-corruption measures, and gradual investor confidence. Not a sudden decree. For a currency to gain value internationally, demand for that currency must increase due to exports, foreign investment, or confidence in governance. Unless Iraq creates an environment where foreigners need dinars to trade, invest, or store value, there will be no natural mechanism to force its value upward. Moreover, Iraq's money supply is vast. Tens of trillions of dinars are in circulation. If the CBI suddenly announced a 1-to-1 exchange rate with the dollar, the liability would amount to trillions of US dollars. An impossible promise since Iraq's entire GDP and reserves combined fall dramatically short of such backing. This is why economists emphasize that a LOP or redenomination is possible, but a miracle revaluation is fantasy. To illustrate, consider this analogy. If you have a pizza cut into 1,000 slices, each slice is tiny. If tomorrow you say that each slice is now equal to one entire pizza, you'd need to provide 1,000 pizzas to cover that claim, an absurd impossibility. The same logic applies to currency. Some proponents argue that after Iraq rebuilds, joins the World Trade Organization, WTO, boosts oil production to record levels and curbs corruption, then perhaps the dinar could strengthen. That part has some factual grounding. Over long horizons with reforms, the currency could appreciate gradually, but it would be incremental, not exponential overnight. When investors look at currencies like the Kuwaiti dinar, KWD, which is one of the strongest in the world at around $3.25 per KWD, they mistakenly assume Iraq will return to that level. But the Kuwaiti dinar's strength comes from decades of stability, small money supply, massive sovereign wealth, and strong financial governance. Iraq, by contrast, has a far larger population, bigger money supply, weaker governance, and more volatility. Cannot simply copy Kuwait's valuation. Another common myth is that U.S. presidents or executive orders have secretly planned a dinar revaluation, with claims that George W. Bush or later administrations planted the dinar as an investment for war veterans. In reality, no such legal or economic mechanism exists. Governments cannot unilaterally set another nation's currency value, and no credible evidence supports these claims. Additionally, many so-called dinar gurus profit by selling dinar at inflated rates through unlicensed dealers, charging high premiums on banknotes that are otherwise worth far less. Regulatory bodies in the U.S. and elsewhere have warned consumers against falling for these schemes. The FBI and SEC have even investigated cases of fraud tied to dinar promotion. In terms of facts, what Iraq has done is maintain relative stability. The dinar's peg has shifted slightly, for example, from 1,190 per USD to 1,460 per USD in 2020, then back to 1,320 per USD in 2023. Adjustments made by the CBI to balance budgets and reserves. These moves are in the range of 10 to 20%, not 100,000%. This is what actual monetary authorities mean by revaluation or devaluation. Small, controlled changes. Looking forward, Iraq does have potential for gradual economic improvement. If oil prices remain favorable, reserves grow, governance improves, and Iraq integrates into global markets, the dinar could slowly strengthen. A redenomination may occur someday to simplify transactions, but it would not create overnight wealth. International organizations continue to assist Iraq in reforms, and there is cautious optimism. But this optimism is about stability and growth, not fantasy revaluations. The persistence of dinar rumors shows the psychology of speculative belief systems. People often prefer narratives of sudden rescue, secret insider knowledge, and hidden truths rather than the slow, grinding work of real economics. In a sense, the dinar revaluation story mirrors broader themes in human behavior: hope for miracles, distrust of authority, and susceptibility to persuasive promotion. For investors seeking real returns, traditional vehicles like equities, bonds, or even diversified emerging market funds provide a more rational path than betting on an improbable currency reset. The dinar story, therefore, serves as both a cautionary tale and an educational case study in how misinformation spreads, how economics actually works, and how vulnerable individuals can be drawn into schemes promising impossible rewards. To conclude, the facts about the Iraqi dinar are straightforward. It is a managed currency pegged to the US dollar. Its value reflects Iraq's economic fundamentals, and any change will be gradual and policy-driven. The fiction is the belief in a massive overnight revaluation that would create instant millionaires. That belief persists not because it is economically credible, but because it fulfills a psychological desire for hope and windfall gains. For responsible observers, distinguishing between fact and fiction is crucial. Iraq may grow, its dinar may stabilize, and its economy may improve, but the dream of sudden unimaginable riches from holding dinar remains firmly in the realm of myth.